Guys, and welcome to another edition of Market Marauders. Today we're going to go over Taronis Technologies, soon to be Taronis Technologies, and Taronis Fuels. First thing, hit that subscribe button below, like, comment, and share the video. And we'll go over. I have a course. It's $40 a month. Basically, I'm gonna give my top five penny stocks and my top five regular stocks. So you can go. I'll have a link in the description below. And if you like the content, enroll in the course, and I'm going to update these weekly. So I'm going to have another one for next week. And here's a preview. You can go and look at charts and see the analysis for my top picks. So now let's dive into the stock. So currently it is at $2.13, which is not too bad. So let's dive into the main part of it. So basically going to go over the press release for Form 10. I have some points on here that I wrote down to go over. So basically, they filed Form 10, announced that Form 10 will be submitted with the SEC shortly for Taronis Fuels. And basically, for everyone who doesn't know what the SEC 10 form is, I have it right here. SEC Form 10 is a filing with the SEC, of course, uh, also known as General Form for Registration of Securities. It is used to register a class of securities for potential trading on the U.S. exchange. Any company with over $10 million in total assets and 750 or more shareholders is required to file Form 10 with the SEC. So basically, they're registering Taronis Fuels for this SEC Form 10. They have to give a bunch of information on what's going on with the company, basically that side of the company, not the water pilot side, but just for the fuel side. And, you know, it's basically a step moving forward. It's something that they had to do in order to, publicly trade the Taronis Fuel. So basically, they're gearing up and getting ready for their dividend split off of shares. So another point on here, they said the revenue um, of the first 6 months was 10.8 million, which represents a 163% increase from 4.1 million over the first 6 months of 2018. So basically, they're saying that they've increased 163% to 10.8 million, and 10.8 million is basically like that threshold to file the SEC Form 10. Um, so they're going forward and moving in the right direction, that they have enough money to do that. They also say expenses decreased 9.5 million or 58% for previously reported 16.5 million for the company's most recent 10Q to 7 million as reported for the Form 10 for Taronis Fuel. So basically, they reported 7 million instead of the 16.5 million. So basically, it's a improvement. And the next topic I want to go over is the operating expenses. So it says, as a result, we eliminated 58% of our operating expenses, realizing a 79% improvement in our net income. But the main part that kind of stuck out to me on this, in this whole article, was this statement right here. It says the exclusion of these expenses the exclusion of these expenses resulted in a sizable improvement in net profitability. So basically, the net loss improved 79% from 11.9 million as reported in the 10Q form, as a net loss of 2.5 million. Uh, so basically, they have decreased the amount of money that they're using. Basically, they have lowered the fire of their cash burn. So the EBITDA for first 6 months of 2019 was a negative 2.1 million with an average burn rate of $0.35 million per month. So it's basically 350K per month was the burn rate of how much capital they were spending. So that stuck out to me because they have this 2.1 million, an average burn rate of approximately $350,000 a month. But if you all don't know what the EBITDA is, it's basically the earnings before interest, tax, depreciation, and amortization. So basically, if you have a low EBITDA, margin includes that the business has profitability problems and as well as issues with cash flow. If you have a high, that means that the margin uh, if you have a high margin, that means that the business is stable. So, you know, they have a negative one, which means that they have, some profitability problems going on, which, they have a lot of things going on basically in the company. I think that this number will increase to be a lot better basically once, they have all these things filed. But then also, if you take this number into consideration, with this negative 2.1 million, uh, and you do just some simple math on that, which I've done before I shot this, you have 10.8, which is their income, and then you have 2.1, which is their negative, and this is both for that 6 month period. So basically, they have $8.7 million uh, in revenue because you have to subtract the negative amount that they've used for that 6 months. So basically, I have 8.7 million revenue on hand, which isn't too bad, but um, what we really want to see is this burn rate to become lower, even lower than 350,000 per month, because that's still a lot of money that they're burning every month. um, or instead, keep it at that rate, but have even more profitability. That will work as well. Um, so, a lot of people are like, should I sell the stock? Should I keep the stock? So I want to dive into, so some of the previous things that happened in the stock's history. So if we go back in history, so there was a significant spike from around February 2012, basically from around December 11th to about June of 12. So this is December of 2011, and this is June of 2012. Um, Going to the press releases, basically can see that the company signs $1 million fuel pre-purchase agreement. Um, Santilli, who is no longer uh, there, and then you have customer growth. So basically, they had a really good third quarter financials in 2012, and I feel like that's what drove the price to skyrocket. So you can see it basically took off for 2012, and it went from about 36,000 to about 87, 88,000. Um, in my opinion, I think history repeats itself. Me seeing it go all the way to 88,000, uh, I really don't see it going that high. But you know, when the company splits off, essentially, I feel like it's going to have another effect just like this one. Um, in that case, in the 2012 case, it was just financials and $1 million deal. In this case, there are more deals and more profitability potential coming with the spinoff. So I think with the fuels will have a similar chart to this one, but I think for the water pilot, it may take a while for it to shoot up. But I don't think it's going to shoot up as drastically as this one did, in my opinion. Um, so if anyone's wondering, like why do people like this stock so much, just basically go to the press releases and look at the history and see what was going on, and then track that with the chart, because the chart will show you in correlation with what was going on at that time how the stock behaved given the news, because it's all on the website all the way back to when the spikes happen. And I think that similarly it'll happen again, especially after the spinoff date and more news comes about uh, the fuels deals, and as those profits begin to roll in and those deals are secured. So that's been another episode of Market Marauders. Make sure you hit that subscribe button below, give it a thumbs up, like, share, comment, and I'll see you guys next time.